Hello traders, Gary Wagner here. It is 11:40 in Honolulu and 5:40 in New York on Tuesday, 30th day of August 2022, and this is the daily report for gold and silver. Gold prices continue to decline now for the third consecutive trading day. Currently, we have December gold futures down $14.10 or 0.81% and is fixed at $1,735.60. When we look at our weekly chart, although it's still early in the week, if this trend continues, we would have the third consecutive week of lower pricing in gold. Like gold, over the last 3 trading days, we have seen a strong price decline. However, the percentage decline is much greater in silver than in gold. And as I speculate about in our opening letter, that could certainly be due to the fact of the industrial component in silver and the fact that U.S. equities have been under pressure, lessening the demand for the precious white metal. Currently, we have September futures at $18.15 after factoring in a 40-cent price decline today. The recent declines in gold and silver have been almost entirely due to market participants selling those precious metals, taking the price lower. We are looking at the dollar index, which is unchanged on the day at 108.795. We can see that over the last 7 trading days, we have seen the potential for a technical top just above 109. This first chart is the dollar index, where each candlestick represents 3 months. That is so I can put as much data as eSignal allows me to display at any given time. And the reason I want to do that is to show that current pricing at 108 to 109 on a long-term basis has no historical reference point in which it topped out. It found a bottom. In other words, there is no historical price point that matches up with 108 to 109. The last time we had the dollar index at this level was on the way up to 120 and then on the way down from 120 to bottom at around 72. It's only on a short-term chart where there is the slightest indication of the possibility of a technical price top. And traders, the price top that I'm referring to can really only be seen on a daily chart, and that is simply by looking at this former high that came in a couple of months back. We do have a double top currently, but as I said, when we look at the big picture, there really isn't any historical time in which we saw a price top occur around 108 to 110. That being said, the dollar is still in a full bullish demeanor with the 50-day above the 100-day simple moving average, which is above the 200-day moving average, precisely the opposite of what we're seeing. Also, we can say that we've had a series of higher highs all the way up for the last couple of years, as well as higher lows. And as long as the Fed continues to raise rates, and they're anticipating raising them to about 4% by the end of the year now, we could see the dollar break above this short-term top and trade higher. Chairman Powell's keynote speech on Friday was a game changer. He acknowledged and emphatically stated that they will continue to raise rates until they believe that they've got a handle on inflation. The most recent data the Federal Reserve has is for the July PCE report, because that is the personal go-to index that the Fed likes to use because it strips out energy and food costs. But that came in still very high at 6.5%, over triple their target rate. So the Fed has a lot of work to do, and a long way to go before they actually reduce inflation to what they believe are acceptable levels. And because of that, we could see continued pressure on gold pricing and dollar strength. To that end, when we look at typical technical studies, such as the 61.8% fib retracement, which would typically be a deep but acceptable correction, and we're looking at a correction from the last leg of the rally from July into the first part of August, the real level that I want to look at is got to be $1,710. That is the 78% fib retracement, but we have to acknowledge that if we don't see inflation having any sizable downticks on the next report, which will be on September 13th, and if 1710 doesn't hold, we could take a third stab for the lows that occurred during the flash crash, as well as recently when gold traded as low as 1680. So our strategy is to look for potential levels of support, and if we see that support come in, look to enter long positions for a much smaller price gain than we would look for if the market was truly trending. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.